Hey, Zed here. Today we're taking a look at technical analysis for SP500 with Elliott Wave Theory. A couple of advertisements here at the start. I finally completed the Elliott Wave and RSI Advanced course, so if you want to master the RSI and want to learn how it can be utilized properly with Elliott Wave Theory, check out the course on Udemy. I've also started counter trend capital with few expert traders that will be paid Discord group. Currently the Discord is free, so you can check it out if you're interested. And lastly, if you want to educate yourself and support me, you can take a look at Patreon, where you can find Elliott Wave Basics course, access to weekly live streams and extra content overall. Thank you for your support. Let's get into the charts next. So here we are on S&P 500 futures chart. So let's start getting into the charts again. So overall, last time we were looking at these charts, we were talking about this very local structure, which is again a very important one for the sake of this could be a very nice start for the downside, or we would be still consolidating before continuing this previous structure upwards. So for the overall structure, we were talking about this kind of possibility where we had this as three ways up into W, three ways into X, and then looking for another leg upwards for that wave Y. 1-to-1 would be around $4,400. At that point, we would be expecting a three-way structure over here, something like that. Before reverting down again per the higher time frame counts. Of course, we had more bullish counts where we were having these as some kind of impulsive wave counts, but again, these are not the main ones. And let's actually see if we invalidated one of these here on the Friday. And yes, we did. So we actually invalidated this whole idea finally on this chart. So again, there is one more chart that we need to be looking at, which is the SPX, where if we could identify that whole same thing here and see here, we have not yet invalidated that idea completely. So again, we probably have to keep it around. However, it is very, very much less likely of a scenario overall. So my focus is still on the more corrective side. Move to the corrective is up, move to the upside is more corrective. So again, that is the main idea, which is again this one. Get to the 30 minutes. So three-way move up into the highs of wave Y, and then we'd be looking for a counter move, either correcting this whole thing, or if this whole thing is done from here, we'd be correcting this whole structure or moving down impulsively. Last time we were talking about a couple of different scenarios here, and one of them is now invalidated, which was this being a start of something, where this again is a five-way structure. So this would be either wave A or wave 1 if it is a start of something, or if it's an end, it would be wave C. Wave C would be fitting like this, which was again the primary idea. And here we had that three-way coming down right into this area that we were talking about previously, and we got some kind of reaction from there. We did take the liquidity from the futures market below here of 40 and 85, which is again a good thing, hitting that all of these smaller time frame extensions here, 1.236, WXY here at the 1.382 or the 1.236. Both of them are really close, not tapping it completely, and the 1.236 of this wave WXY as well, which is again, we have three different Fibonacci extensions right over here, which is a good thing. Look for confluence. Now, since then again, we had kind of an impulsive move from the lows. This here was the lowest low of them all at this moment, and the move from there seems kind of impulsive. Potential 1, 2, 3, 4, and in the middle of the fourth and fifth to be made. So if we are going to get some kind of pull back, we could be looking for more upside. Yeah, that is basically that. Of course, we had still the other option where this was the case, where this was a wave 1, 2, another 1, 2 of smaller degree, and yet another 1, 2, 1, 2, and then we'd be moving downwards again. At this point, we definitely want this to be third wave here. Well, not definitely, but we want to see this structure extend downwards more, because again, if we are coming up, we are first risking this wave 1 here, and after that we are risking this wave 1. So again, this many 1-2s in some kind of nested pattern is not very probable. So that's why I do again prefer the WXY count overall. However, this is still possible. The issue with this one is that this definitely to me looks like a 5-way structure. However, as we have taken out the lows here, we can confirm that this is not again a start of something at least. But yeah, of course we could be saying that this is some kind of A, B and C, very extended C, but it does not really look good. But yeah, probability wise, it's the end of this structure here. At that point again, we would have this as the wave 1, and this would be shifted over here as labeled. So wave 2 would be in here of this micro or red count instead. And at that point again, we would have the exact same as we had on the WXY count over here, and we're still having these nested patterns coming down. However, if we are getting back up to the 4098 area here, then we are basically looking to invalidate this whole idea downwards, and we would be most likely creating moves to the upper side. So I think that is going to do it. Again, my favorite is this one, as we have possibly completed this WXY here. I'm thinking that this is still too small to be correcting this whole structure over here. So in my opinion, this would be the first structure in the upcoming structures that would be correcting this move, or it would be the first structure of upcoming structures that is correcting this whole structure here. So at this point again, we would be creating a lot of more of these zigzag structures. At this point again, this is very overlapping, therefore favoring the more corrective count overall. And of course the Fibonacci extensions here line up very well. But I think those are the expectations I have at the moment, looking for more upside first and then again downwards. We'll see if these are starting to break these highs, then we can start to look for more higher moves. But again, we don't need to be looking too much higher in my opinion, as this is still more correcting to do, or at least I think it needs more correcting to do. If we start to break the $4,300 area here, it starts to make that this is more likely not a B wave anymore. So this would be wave A here, and this would be wave B, and then we'd be looking for C. But if it goes beyond the $4,300 area, then we are most likely looking at something else completely. But until that happens, I'm still going to be favoring discounts over anything else. But I think that's going to do it for this video. Again, if you made it this far into the video, I would appreciate the likes and comment on this video. Check out the description for more content, Patreon, Discord and CTC as well. Thanks for watching and see you on the next video. Bye bye.